Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 28th of January. I'm Daniel Lam, your host for the podcast. First of all, please take note that there will not be any podcast for Wednesday and Thursday due to the Chinese New Year public holidays. We will have a special Cut to the Chase podcast this Friday, where we'll be discussing our thoughts on the FOMC and ECB decisions. Now today, we'll be talking about gold, because I've been getting questions on that topic, both from clients and from the media. Well, gold is very connected to the merits of holding the US dollar, in fact. Now, the bullish view on the dollar is driven by expectations that US growth outperformance will keep US rates higher than global peers, and that Trump's policies will sustain US exceptionalism. But the bears would argue that the dollar is overvalued, and that Trump's economic and geopolitical agenda will ultimately self-defeat US growth. However, there's a lack of alternatives here, because there are persistent growth concerns in China and in the euro area, thus inducing the flow into gold even in this high-rate environment. So the official sector remains one of the biggest buyers of gold, with gold's share of global reserves now at the highest level since the 1988 US elections. Now, the sharp rise in open interest suggests that short covering has been driving the recent leg higher in gold. There's also been strong physical demand, from India's seasonal buying in the fourth quarter last year to China's ahead of the Chinese New Year. The latest China trade data shows gold imports exceeding 100 tons again in the month of December, taking full-year imports to nearly 1,400 tons. That's down 7% year over year, but still above the 2022 levels. In terms of technicals, gold has been on an uptrend since the middle of December, with rise in momentum on indicators such as the RSI and MACD. We are overweight gold, and investors should consider buying on dips, especially if it corrects to the 2,650 level. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.